and the IT index could outperform. That's precisely what's happening.
No, the top gainers on the Nifty include a lot of metal stocks.
So markets are bleeding green today.
Modest way of putting things. Things are looking great, actually. 200 plus points, as we've been discussing. And just take a look at what's going on, right? I mean, it's a global move, first of all. Super close, 230 points higher. 19,673 is where we're end off, which is just under the 19,700 mark.
Hello and welcome to Markets Today. I'm Ekta Batra and here are the headlines for this evening. Stocks rise across the world after core inflation in the US slowed to a two-year low. Sensex gains over 700 points, Nifty gains over 200 points. All sectoral indices end in the green. Siemens Energy is set to sell 18% stake in Siemens India for over $2 billion. Another Siemens subsidiary in the buyer in what is an inter-promoter transfer. The move is likely to set the stage for a demerger of the India energy business. Manappuram Finance jumps on strong growth in asset. Narayana Health gets a boost on growth from higher margins, while Kalyan Jewellers shines on strong sales growth. Ethos gains over 7% after reporting a strong Q2 performance. India's weight in the Morgan Stanley Standard Index for emerging markets is set to rise, with 9 new stock additions seen drawing in over $1 billion. India's weight in the index could rise by nearly 40 basis points to over 16% as a result. Allegations and counter-allegations fly thick and fast as a bitter takeover battle breaks out between the Berman family and the Religare management. Speaking exclusively to CNBC-TV18, Mohit Berman rules out hiking the open offer price and terms allegations made by Religare directors are baseless and malicious. All right, well, those are the top stories that we're tracking, but here's the lineup of what we have in store for you this evening. In Market Opinion, we have Manish Suntalia, the Chief Investment Officer at MK Investment Managers. In Big Voices, we have Sandhya J, who's the Group Chief Financial Officer of Narayana Health. All right, on to the first headline this evening, and it is on the day's trading action. Global markets surged on U.S. inflation relief. This is after headline inflation in the United States softened in October on the back of easing energy prices. The Lal Street rose in line with the global markets. The Nifty and the Sensex gained over 1%. We have Prashant Nair here with the details.
Well, we came in this morning with the knowledge that it's going to be a big one, a big day, and it did not disappoint. The handoff from Wall Street was super positive. The Nasdaq, the S&P, the big fall in yields, and actually more importantly, the Russell 2000, which is the small cap index in the US, that rallied 5.5%, right? That's basically most representative of a wide range of US companies, 5.5% move. So it was going to be a good day. We got a massive gap up. And the great part is that we actually ended slightly higher than where we started. Usually you want a lower start and then maybe, the dip gets bought, but it was not that. A strong start which became stronger by the end of close. The Nifty is up on your screen. The Bank Nifty sort of coming up to important levels, mid caps and small caps. And small cap index, once again, the strongest out of the 4 indices as we've been highlighting over and over again. Now, just to tell you which stocks in the Nifty did well. So, Eicher, Hindalco, Tata Motors looking very strong. The tech pack, right? Tech Mahindra, Infosys, LTI, Mindtree, Wipro, TCS, all rallying and contributing handsomely to what the Nifty did. Broader markets, long list of strong gainers with volumes. And, Angel One, Manappuram, Phoenix Limited, Chennai Petro, Wellspun India, Oberoi Realty, Emphasis, Motilal Oswal Financial Services, Tube Investment, Nesco, Ahluwalia Contractors, Dodla Dairy, Bikaji, Hindware, Kalamandir, which is recently listed, EMS, Quick Heal, PG Electroplast. I can go on, but I think this gives you a sense of how broad-based the move was. There were some pullbacks as well. NMDC, Natco, Supreme Industries, and Credit Access. Religare also sold off. Of course, we had an interview with Mr. Burman on the Religare issue. What next? I think we got to watch whether the rally in the US continues. Can yields drop off another 20-25 basis points? Can the broader market in the US, especially the Russell 2000, continue to build on the gains that we saw? I think that will give us further cues. But, here on the Nifty, we are very, very close to previous all-time highs. And at least we have a line of sight to those levels once again. Back to you.
Okay, all right, Prashant. Thanks very much for that. Let's get you some market opinion then. Manish Santhalia, the Chief Investment Officer at MK Investment Managers, believes Indian IT stocks will do well on the AI theme. Take a look.
Artificial intelligence is one big theme that is set to rule the world in many years out. The game has already started. Indian IT companies will also stand to benefit out of this. I think, before artificial intelligence becomes mainstream, there would be opportunity both in the mid and small cap space. Many of these companies will get created outside the mainstream IT companies, and as like in the cloud computing space, they got integrated into mainstream IT companies only after a while. So similar is the situation which we are likely to see even in the artificial intelligence space.
Okay, well, that's a market opinion then. But let's move on. A 95% surge in gold imports took India's trade deficit in October to a record high of more than $31 billion. That figure came in higher by 18% versus the same period last year. Overall imports have risen 11%, hitting a 15-month high, while exports rose 6%. Lata Venkatesh is here with the details on this story.
Well, the trade deficit quite clearly is worrisome. It's the highest ever monthly trade deficit of 31.46 billion. I'm only counting goods over here, not services. This trade deficit is up about 20% over last year and 62% over September. So let's be under no illusion as to the big, volume of trade deficit that we have at this point in time. The trade deficit is $12 billion more than it was in September, and only $3 billion each can be accounted for by gold and oil. So this problem is beyond that. It's beyond just high oil or high gold imports. The imports are higher clearly due to a strong growth in India across the board. So several things like machinery and chemicals and ores are responsible for the higher imports. It would be okay if our exports also grew commensurate, but they are not. At $33 billion, they are $1 billion less than it was in September. So clearly destination countries are not as strong as we are. We have always been compensated, at least in the last 3 years, by services exports. You know, all these GCCs and the software companies. But services exports at $28.7 billion in October is $1 billion less than it was in September. So slowdown is hitting the services exports, and that's why the rupee, as soon as the numbers got announced, saw a distinct fall. It was strengthening in the morning because of the weakness in the dollar index and the fall in US yields, but that stopped and the rupee weakened after these numbers came. We have to worry a little about these numbers. You know, if you add the services surplus, then you get a net deficit of $17 billion per month. We have used up $17 billion more. Of course, in July and August last year, we used up $20 billion. But those were times when crude was at $110. Now crude is at best $90 billion. In spite of it, if we are reporting such a large deficit, we should worry. If this is a one-off, fine. But if you're going to do, you know, a $30 billion trade deficit and a $17 billion overall deficit month after month at a time when FIIs are selling out of Indian equities, there is a near-term problem in terms of filling that deficit.
Okay, all right, Lata, thanks very much for that. Well, on to the second headline now. Siemens India surged after Siemens AG has entered an agreement to buy 18% stake in the company. The purchase consideration for the transaction is over $2 billion. Vivek Iyer is here with the details. Vivek, tell us what you're picking up on. What is a big deal?
Well, absolutely right. So, you know, what's been happening over the last couple of weeks is the fact that Siemens Energy, you know, the renewable arm, which is listed in Europe, actually this particular entity has been going through a financial crunch. And on the back of that, there was an overhang given the fact that they held close to a 24% stake in the Indian listed Siemens, Indian listed Siemens. Now, what's actually happened over the weekend is that there has actually been a corporate guarantee, you know, there has been a guarantee given by the government that is, number one, it's a bailout plan as far as Siemens Energy is concerned. Now, the second step is the fact that, you know, how exactly are they using the India stake to go ahead and reduce the troubles as far as Siemens Energy is concerned. So let's have a look at, you know, what exactly the press release says, and we try and break down how exactly this particular development impact Siemens India. Number one, what the press release indicates is that Siemens AG, so there are two entities, both of them that own significant chunk as far as Siemens India is concerned. Number one is Siemens AG. Now, this particular company would be acquiring an 18% stake in Siemens Limited, and this particular stake acquisition will be done from Siemens Energy. So, Siemens AG currently owns 51%. After the 18% stake increase, their stake will go up to 69%. Siemens Energy, it has a 24% stake. That will reduce to 6% after this particular stake sale is done. The purchase price is at 2.1 billion euros, which indicates a 15% discount to the 5 days volume weighted average price. So it's a significant discount. However, this particular deal is being done, between two promoters itself. So the good part is that there will be no supply overhang as far as the stock of Siemens India is concerned. Along with that, Siemens has also said that they will not be providing any new guarantees to Siemens Energy. Now, step two, this is one particular step that the company had indicated a while ago, but had postponed it. But now, what Siemens is saying is that Siemens, as well as Siemens Energy, will propose to the board a demerger of the energy business. So the Indian listed, Siemens Energy business will be delisted demerged as a separate entity, and they plan to complete this particular demerger by 2025, significantly earlier than previously planned. And lastly, they're talking about the residual approximately 5% stake that Siemens Energy will continue to own in Siemens India. So that particular 5% stake will now be provided as a collateral to lenders. And in case, there is a call on this particular collateral, Siemens AG, the global arm, has said that it would be buying this residual 5% stake at a valuation of close to $750 million. So significant overhang removed as far as Siemens India is concerned, as far as the ownership of the 24% stake of Siemens Energy is concerned.
First of all, keep in mind this India setup was driven when we did the spin-off by administrative restrictions. So we knew that at one point in time we need to untangle the Siemens AG and Siemens Energy business in India. For both of us, India is a super important market and we want to be very prominent present there. This separation of the two businesses, so Siemens AG and Siemens Energy, it prepones certain things and really starts this process over. It will still be a multi-year process of completely untangling it.
Okay, well, on to the third headline now. Manappuram Finance rallied nearly 8% after reporting better than estimated numbers in second quarter. The company beats poll as the non-gold portfolio growth was strong. Abhishek Kothari is here with the key numbers on this.
Well, to begin with, Manappuram, they have beaten our poll with reference to, NII and PAT, and that is on account of non-gold financing business, which is doing really well. So the AUM growth is about 27% YOY and about 5% sequentially. The gold loan share continues to decline and now is at 53.5% when compared to 62.5% YOY and about 55.5% sequentially. The non-gold AUM share, now that's increased to 46.6% when compared to 37.4% in the same quarter last year and about 44.4% on a sequential basis, and this is helping the yields as well. So yields are super impressive for second quarter in a row. Calculation shows that the net interest margin might have expanded by 21 basis point. Analysts were working with an expansion of about 5 to 10 basis point. The NII is at 1,467 crore. We are working with a poll of 1,365 crore. Other income has remained almost flat on a YOY basis, while the PAT has come in at 561 crore, while we were working with a number of 517 crores. We have brokerages who have written on Manappuram Finance. BofA Securities has a buy recommendation and a target price of 182 per share. They say that the stock is trading at 0.94 times price to book value FY25. This compares to about 1.4 times the normal range or average that they have seen over the last 5 years. So they believe that the current valuation undervalues the strong non-gold business growth and the yields that is there in the MFI portfolio. Morgan Stanley has also written on Manappuram Finance. They have an overweight rating. They have increased the target price to 200 per share from the earlier target price of 183 per share. They see upside risk to earnings as well as valuation multiples for the stock. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So that's on Manappuram. But let's talk about Narayana Health also, which surged over 4.5% after reporting what was a good set of second quarter numbers. So the revenue was up 14%, margins expanded to 23.6%, which was a multi-quarter high. Profit up around 34% Cayman Islands, which is their international hospital, revenue grew to 31.5 million versus 29.1 million there as well. The company has said that majority of the growth has been achieved without a rise in the average revenue per patient. They have seen an improvement in their surgical mix. They will continue to work on costs when it comes to margins. When the company is hit with headwinds, they don't generally pass it on to patients. No price hike has been taken by the company as yet. They will have more clarity on price hikes by the next quarter, and they will probably take low single-digit price hikes as they have every year. They are doubling down on the company's capacity. They will probably look at inorganic opportunities if the time comes, and when there is an opportunity, they will focus on building hospital capabilities as of now. They have also applied for an insurance license. They are going through the process to get that license. Let's listen in to the management whom we spoke to earlier this morning.
There is definitely improvement in the surgical mix. But I do want to say that a lot of it has come because of digitization, improved throughput, and cost rationalization. So if you would see our revenue growth profile over the past, say, 8 or 10 quarters, you would see that a lot of it has been achieved without a significant growth in the average revenue per patient. We don't guide into the future. Definitely, we will continue to keep working on cost.
Okay, moving on. NMDC slipped nearly 3% after delivering a weak set of numbers in the second quarter. Margins contracted and realizations declined sequentially. Nigel D'Souza is here with the details.
Well, NMDC's numbers, if we look at it on a year-on-year basis, there was a growth both on the top line as well as on the EBITDA front. But the problem was that the margins, on a sequential basis, there's been a bit of a dip out there. And it's been to the tune of close to around 500 basis points. What played out here was, one, is that on the sales volumes numbers, they declared their provisional numbers. And the number that was declared actually was a little lower than the provisional number. So that's point number one. The second factor is on a realization front. Yes, the street was working with some kind of softness on the realizations in quarter two in comparison to quarter one, but they were not ready for a 700 rupee drop. And that's the reason why, in fact, we did see that compression in terms of margins in there. So the pain point for these numbers were in terms of the margins. The good news, though, is that from now on, margins could recover because realizations will recover. Why is that? They've already taken a price increase in the last couple of months or so. And international iron ore prices have firmed up as well because Chinese inventory levels are very, very low. But these numbers for the past quarter go down as a disappointment.
Okay, all right, Nigel. Thanks very much for that. Time for a short break. We'll be back with all of the other top stories. Welcome back. You're still tuned into Markets Today on CNBC-TV18. On to the fourth headline then. Index provider MSCI has added 9 Indian stocks to its emerging markets index in its November review. The change will come into effect from market close on the last day of the month. Vivek Iyer is back with us to give us these details.
So early today morning, MSCI, this is largely anticipated in terms of, which are the stocks that are entering the index. And the index that we're talking about is the MSCI Global Standard Index. Remember, a whole host of quant analysts had actually already started penciling in the names. And most of the names that have been added to the MSCI Global Standard Index are largely along expected lines. So this is a net inflow even for India. Remember, the changes will take place on November 30th. So November 30th, expect inflows of over $1 billion in Indian equities on the back of these passive funds that will track the MSCI Global Standard Index changes. Which are the stocks that have made the cut this time around? APL Apollo Tubes, Tata Motors DVR, Macrotech Developers. You're also talking about Tata Communication, Persistent Systems, over $220 million of inflows over here. Also, IndusInd Bank, IndusInd Bank was a candidate on account of the foreign, shareholding actually coming lower this time around after the shareholding pattern was released. So on the back of more foreign room being available over there, that stock made the cut. Polycab 197, that is Paytm, and Suzlon. Suzlon is likely to see inflows of over $240 million. Now, along with that, there is also quite a few changes that has been made as far as the MSCI India Small Cap Index is concerned. 42 additions, 19 deletions. The prominent among them are Gateway Distriparks, Ahluwalia Contracts, and Gokuldas Exports. So expect some action in these names as well come November 30th.
Okay, all right, Vivek. Thanks very much for that. Well, on to the fifth story then. Allegations and counter-allegations fly thick and fast as a bitter takeover battle breaks out between the Berman family and the Religare management. Speaking exclusively to CNBC-TV18, Mohit Berman ruled out hiking the open offer price and termed allegations made by Religare directors are baseless and malicious.
We are focusing on our open offer. We believe that everything is above board, and sooner than later all the regulators will give us the nod to proceed and close the acquisition.
Let's just talk about that open offer price. How significant do you think that is in this entire scheme of things, or you think it's gone beyond that? It's not about the price anymore. I mean, if tomorrow you were to raise the price, do you think things can be brought back on track?
No, as I said, I always believe an amicable solution can be worked out, and I don't believe it's the price, because we're well above the SEBI price formula. So I don't think it's well with the price. If there's someone else who's willing to give a higher price, then let them also make let them come in the fray. I don't mind. It's not something which we believe we've offered a fair price for the business, and let the shareholders decide.
Are you willing to go up?
Well, at this point of time, no, I'm not. At that time, she accepted she accepted our offer and said that she will help us in getting all the permissions, as well as helping us navigate getting into the business and making us understand the business. As soon as we voted her back in, now she's using all that against us.
But to be clear, did you want her to continue, or did you want, when the open offer bit happened, did you want her to continue as the helm of affairs, or what was the offer given to her? What was the discussion?
No, as far as we're concerned, listen, we don't want to upset the management as well as the board. We are professional. All our businesses are run professionally. Family members only take seats on the board. And even in this case, all our discussions were centered around the fact that at the most, we may supplement the board with some more people, who can add value to the business, and as well as provide capital to each of the businesses to take it to the next level. There was no question about us replacing anyone.
All right, well, on that note, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.